This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, and we've been selling homes here in Southern Nevada since 1988. And I also have John Ingram here from CrossCountry Mortgage. John's he's licensed. He's got an NMLS number 552596. One of the things I want to touch on today is that you had mentioned to me before that Fannie Mae is reevaluating their view of borrowing. Tell me what's going on with that.
A couple of the big things that they did was they've changed the rules in regards to student loans, and we've spoken on past shows about this. Student loan debt is a $1 trillion thing over our citizens in our nation, and that has put somewhat of a stranglehold on the amount of borrowing for those people who did go through higher education and happen to carry a significant school debt. So they've re-looked at that and basically have said, we want to be more understanding and give more flexibility for those people that might have student loan debt that is deferred, student loan debt that is on an income-based repayment program. They don't want to continue on with their previous rule, which basically said, I don't care what you have to pay right now. I want you to qualify as if you're going to pay off all this debt in a short period of time.
Wow. Okay.
So they've re-looked at that and they said, you know what? If you're on an income-based repayment program, it's okay for us to make you just afford that obligation as it stands.
And that makes a lot of sense. Freddie Mac is also kind of re-looking at things.
Yeah, so they're basically two entities that are doing the same thing, right? Mm-hmm. They have slightly different takes on the rules for yes or no on mortgages.
Right.
So Freddie had a concern regarding sort of a loophole they had left in their rules, a loophole that lenders and borrowers had been taking advantage of previously. Effectively, it allowed for a consumer to come in with a 1% down payment on their house, just 1%.
Wow.
Of the price of the house, and then the lender was able to basically use the profitability of the loan to give them a gift to make a 3% down payment.
When we hear people talking about another bubble burst, and one of the big things I always go back to is the idea that lending is not like it was then. And this is one of the things that's kind of protecting us from people just bailing on these houses, is the fact that they are being vetted properly.
Oh, absolutely. I mean, if you got a mortgage in the last, say, 8 years or so, you proved that you had the ability to make that payment.
There's little doubt in my mind.
That's not going to stop people from getting in trouble, and people lose their jobs. Yeah. People,
bad things still happen.
Bad things still happen, but that's going to be a manageable percentage,
right?
And that will keep our market more stable.
So the standards are still higher now than they were in the mid 2000s. Much tougher. Much tougher. And what happens is I have a lot of clients who are financially strong. I mean, they've got good FICO scores, they got money in the bank. And in their minds, they'd like to go back to the days of just, where do I sign? Give me the money. And they can't. And they're frustrated by that. And I understand their frustration, but I also have to remind them, gee, guys, that's what got us in trouble in the first place. I know you're not the problem, but there were other people borrowing money without these standards. So we have to remind people, gee, let the vetting process take place. Endure it.
You've been listening to Las Vegas Real Estate Now with host Harvey Blankfeld. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.